What's going on, guys? I want to give you guys a little bit of a narrative, right? A little bit of a backstory on what exactly is happening with today's price action. Now, today can be very, very frustrating where I can see a lot of traders potentially, chopping themselves up, getting very frustrated, making a little bit of money, giving it back, losing a little bit of money, making it back. One thing that you need to notice, we had a big market sell-off yesterday, okay? So if you kind of look at this chart, we're looking at the 1 hour time frame. You can see yesterday that we really started to gain that momentum around 10 a.m. Eastern time, okay? Followed by a little bit of consolidation, then the confirmation. So the real true entry, depending on if you're a scalper or you're looking for bigger levels to confirm, could have been on the loss of the 20 SMA on the 1 hour time frame, as well as this linear regression. That price yesterday was sitting at around 18,241. Okay, I'm going to quickly go over yesterday's price action, kind of get into today where we stand. Your next confirmation on where that short position could have been would have been around that 9 a.m. Pacific Standard Time, time block, right? That 1 hour candle, because that's when we really started to confirm the loss of this demand zone. Okay, so you can see the loss of the demand zone is here. We had a little bit of consolidation putting in this bottom, and you can see a lot of space into our next demand. And then obviously once we confirmed, we flushed into this demand and actually went lower. Now, again, you're probably never really going to catch the whole move unless you have, some profit taking going on and you're just letting a runner stay on the table and kind of moving your stop loss with that price action. If you're just a quick scalper, you're just a quick day trader, you're really looking for loss of levels and you're looking for confirmation and you're looking to take profits into the next area of demand if you're short, or into the next area of supply if you're long. Okay, now you can see once the market closed and all of this morning's pre-market data in action has been going sideways. Okay, range is very contracted, right? And we're not really getting a big bounce. We're not really getting a big continuation flush. Is it just a digestion of what happened yesterday? It's entirely possible. And anytime you get this extended move to the downside or upside, followed by a long period of distribution, look for the next big move to take place. Now, whether that's a bounce back up into 18,200 or whether that's a new leg down into the 17,000s. That's where it becomes a little bit tricky and where you have to kind of navigate yourself as a trader. What I'm telling a lot of traders in my room right now is cut your position size down in half. So if you're normally trading 1 mini contract, trade 5 micros. If you're normally trading 5 micros, trade 2 or 3 micros. If you normally trade 2 or 3 micros, trade 1. Yes, I understand that the money's going to be a lot less when you do win a trade, but your losses are also going to be smaller and more manageable as well. What we're looking at here, just looking at today's price action from when the market opened up, is a whole lot of nothing. Okay, if you look at the 1 hour time frame, we've got a 52-point range on this candle, set 88-point range on this candle, 97-point range on this candle, 85-point range on this candle, 68 points, and this current candle is 36 points. So you can see that the market, since it's open today, 4 hours ago, is trading with inside a 70 to 90 point range. Okay, anytime the range is that tight, when you zoom down and you start looking at smaller time frames, like the 5-minute time frame, for example, you're going to see a lot of potential setups, but you're not going to see a whole lot of follow through. Okay, so when you look at realistically when the market opens, I'll just kind of scroll to where the market opens. We got an immediate washout followed by a 20 SMA play getting back over this supply that kind of puts in a new high for about 15-20 points and then pulls right back. You get a setup to the short side that kind of goes down for a little bit and then pulls back. Another long setup that would have paid. Again, very frustrating though, because it goes up, comes back down, goes up, comes back down, goes up, comes all the way back down. So anytime you're in these type of trades, and give this one as an example, where you start to make a little bit of money, then go flat. Start to make a little bit of money, then go negative. Start to make a little bit of money, then go back to flat. Those trades can really put a trader's emotions on tilt, and you can start doing things where You start selling out of positions early, taking a small loss, and then realizing that you would have made money if you would have just sat in your position. You get into a position, make a little bit of money, and then want to get back into the same position and then lose it all back. So anytime you can see that and start to identify that this price action is starting to develop where it's very, very choppy, there's not a lot of follow through, there's no trend in the market, you need to do one of two things. You need to cut that position size in half and kind of look at the market as, I'm just going to get in where I fit in, make a little bit of cash, get green, get out. Treat it more so as a scalping environment. Set yourself a daily loss limit. Let's say, for example, $200, $300 on the day. If you kind of hit that loss limit, tell yourself, I'm going to come back tomorrow, because tomorrow could be a better potential day. Same thing for if you're, positive $100, $200, $300, kind of just come back tomorrow, right? Reset yourself. Or you can just wait and sit on the sidelines until we break out of the range. Now, there's no right or wrong way to do it. No one way is better than the other. I know some people, you got that itch, you got that desire to want to trade because the market's open. A lot of people see price action moving and they think that there's always a trade. Again, remember, just because the market is open does not mean that every single day is tradable. There's a difference between a tradable day in market and a market that's just open and going nowhere. We need ranges to expand. We need ranges to get out of contraction. Okay, so anytime a market is contracted, makes it very difficult. But not only makes it very difficult just, for the pure sake of watching paint dry, it makes it very difficult because the longer you sit here watching price action, essentially watching paint dry, the more you start to see things on the chart that aren't there. You start to anticipate moves and try to get in early. I think that the market's going to go higher. I think that the market's going to go lower. The market's not doing anything right now, so let me just kind of get into this long position. We're holding this floor and then it goes lower. Let me get into this short position because I don't think the market can break out today, and then something happens and the market goes higher. So again, treat this business with a level of respect, the way you would treat any business, with a level of respect. Manage your money accordingly. Wait for ranges to get confirmed. So for example, today we've got a couple of highs here, right? You can see a little bit of a double top. We need price to break that double top. Okay. Now when price breaks that double top, it can shoot up in one move. And a lot of times traders will try to chase that first initial move. Okay. Sometimes you get lucky and it rides into the next supply zone and you cash out. Other times you take that first move and then it comes right back down and you get stopped out. And you're kind of wondering, well, I've been waiting for price. I've been waiting for this to happen. I've been waiting. Why didn't it work? There's no real answer that anyone can really give you. Some trades are going to work out, some are not. But do you have the discipline to kind of walk away when the trade doesn't work out? So realistically, what I would like to see is I would like to see this double top get taken out, have ourselves put in a new high, and then pull back. Okay. Now, when we pull back, I want to see this prior resistance hold as new support, and then I want to take out the new high. And as soon as I take out the new high, that's where I want to be long. So again, this is a pattern. This is a setup that I've traded time and time again, that I'm familiar with, that I'm comfortable with. You need to have these things happen and take these trades and learn from these trades so that in the future, when you do get these potential setups, you have no problem taking these trades. Okay. So again, what are we looking for today? We're looking for a couple of things. We're looking for this double bottom in the support here of the 20 and the 200 and the linear regression channel to get broken, a new low to be put in, some type of back test that's showing us weakness. And then when we take out that new low below this double bottom, we want to be short, and or we need to take out this double top, put in a new high, pull back, show some strength from the buyers. And then once we take out that new top, we want to go long. I hope this video makes sense. If it doesn't, leave me a comment, let me know. I'll see all of you guys on the next video. Make sure to like, comment, subscribe, and I'll catch you guys all next time.